Joint borrower sole proprietor mortgages are one of my absolute favorite things to talk about, probably because a lot of people don't understand what it is. They've never heard of it, or it hasn't been explained to them in the best way. So today I'm going to just talk you through joint borrower, sole proprietor, the mortgage option that many first time buyers don't even know about. So the key things are you can increase your affordability. So if you're trying to purchase a property and you're not quite making it there with affordability, then this can help you. It can protect the first time buyer stamp duty. This is another reason why a lot of people use this product, and it can help you get help from your parents. So your parents can help. Do they have enough equity in their home? Is their home paid off? What is their age? They'll be on the mortgage, but not the deed. And adding them will increase your buying power, which means that you may be able to buy sooner than you thought you'd be able to buy. So make sure that you watch this until the end. My name is Anthony Lindsay. I love joint borrower sole proprietor mortgages and talking about them, not only because I do them quite regularly, but because it can be life changing. But make sure that you remember, as with any type of mortgage, that you do need to speak to a qualified professional and that your home may be repossessed if you don't keep up the repayments on your mortgage. My name is Anthony Lindsay, and I've been in finance for over 30 years. I've done wealth management, I've done collections, and I've done lending. Why is that important? Because it means that when you're talking to me, you're not just getting information about the product, but you're getting support with whatever you're looking to do, and also just a wealth of knowledge that has been built up over 3 decades. So what is a joint borrower sole proprietor mortgage? A joint borrower sole proprietor mortgage is essentially a mortgage where you have an individual who maybe doesn't have the affordability to get a mortgage by themselves, and then they have someone who's willing to go on the mortgage but not on the deed. So there's some key things that you need to remember. Number one, you will be the legal owner, but the payment responsibilities are joint, everybody that's on that mortgage. So the things to keep in mind, as I said, 100% ownership of the property for the person that's on the deed. You can add up to 3 additional people to the mortgage. So up to 3 additional, it depends on the lender, and all borrowers are responsible for the monthly payments. And this is a key point, because although the other people are not on the deed and don't have any legal ownership of the property with joint borrower sole proprietor, they do have responsibility for paying the mortgage. So you need to make sure that you're working with someone who you trust and who trusts you, and that you have a really solid exit strategy. Why do people use joint borrower sole proprietor? So there's key reasons why people use joint borrower sole proprietor. Number one is a joint borrower sole proprietor mortgage can help if the borrower by themselves cannot afford the mortgage, or they don't meet the affordability. And it can keep the property in one person's name. And this is important. Some people use the joint borrower sole proprietor mortgage because maybe the one of the people on there already has a property, and therefore they don't want the second property stamp duty. Now, I'm not advising that you use it for that purpose, but this is one of the reasons why people will use a joint borrower sole proprietor. So you might have a couple where one of them already owns a home and they're now coming together, they're getting married, and they want to buy a home together. But what they don't want is the additional stamp duty. So speak to a solicitor, make sure that you're using this product in the right way, because I have a lot of clients that come to me and want to use JBSP to avoid stamp duty, but when they're calculating what the stamp duty actually would be, it's either non-existent or it's nominal. So speak to a solicitor, make sure that you understand the product and that it's being used for the right purposes. But it's a great product for the right purposes. Who can help? Now, this is going to be something that is going to be dependent on the lender. So each lender is going to have different criteria when it comes to joint borrower sole proprietor. So some lenders will allow close friends. Some lenders will only allow a blood relative, so a parent or a sibling. This is why speaking to a mortgage broker is so important. You want to make sure that you're speaking to someone that understands the products, but most importantly, understands your individual circumstances. Siblings are good because most lenders are going to allow you to use a sibling, but also you have to keep in mind that age matters. So when you're looking at someone to get on the mortgage with you, joint borrower, sole proprietor, make sure that you're aware of some of the restrictions around age or maybe the other person's credit rating. Key things to remember: a joint borrower sole proprietor mortgage can be fantastic and it can help, but everyone should understand the responsibilities. So, as a joint borrower, you're legally responsible for the mortgage. So, if the other person stops paying, you're responsible. Their income is assessed, but also their outgoings. Their existing commitments are considered. The mortgage may affect their future borrowing. And as I said, age matters. So, what does that mean? In short, when you are talking to someone about doing joint borrower, sole proprietor with you, you have to make sure that you understand that their age can affect the length of the mortgage and therefore impact the monthly payments. There are some lenders that do what's called dual term. So they'll take the oldest person and put a shorter period against them and the younger people a longer period against them to calculate the payments. But you need to speak to your mortgage broker about that because not every lender does that. The other thing that you need to take into account is yes, you are adding the other person's income, but you're also taking into account their commitment. So, for example, let's just say, you're going to put a sibling on there, and that sibling who lives in another household also has a mortgage. For the sake of ease, let's just say that the sibling has a £4,000 income per month, but their mortgage is 2,000 per month. The lender is going to take away that 2,000 and other living expenses. So you want to speak to a broker. You want to do the math before you proceed with this, because although it's a great product, it does involve some calculations which you can do in advance. So make sure you speak to your broker. The other thing that you want to keep in mind is that it may impact their future borrowing. So it may impact their future borrowing. It's important to understand that with a joint borrower, sole proprietor mortgage, that it will impact the other person's future borrowing because now they have a mortgage responsibility on their credit file. So although they're not on the deed, they do have the responsibility to pay the mortgage in the event that the other party does not pay the mortgage. So you want to have that conversation up front and make sure that it's understood. As the owner, it's a great thing because, again, you get on the property ladder a lot quicker. But the things that you want to keep in mind are that it keeps you with the legal ownership. So you're the legal owner. You will benefit from any increases in the property, but it's also your responsibility to maintain the property. So you benefit from the fact that it's all in your name. You benefit from any increases in the value of the property, but you're also responsible for the maintenance. And the other person on the mortgage, even though they're not legal owners, they're responsible for the payments if you do not make the payments. And it can impact their credit and ability to borrow in the future. So, great product. Make sure that you talk it through. Make sure that you understand the features. Make sure you understand the pros and the cons of the joint borrower sole proprietor mortgage. The key takeaways are every lender has different criteria, which is why you want to speak to a mortgage broker in advance. There's only one legal owner or set of legal owners. Usually, the joint borrower sole proprietor mortgage is used for a couple. So let's just say me and my wife, and one of us has a parent who's willing to go on the mortgage. So as a couple, we'll be on the deed and the parent will be on the mortgage, but will not be on the deed, which in some cases, that's actually the problem. So if you're doing it with a sibling, or maybe you're doing it with a close friend because the particular lender does allow that, the other person kind of does have a risk in the sense that they have no legal ownership of the property, but they do have a legal responsibility to make the payments. But if you've talked it through, if you've watched videos like this with them, then they'll be clear and they'll understand. The other thing that I would say, make sure you do always speak to a broker before you get started. Don't go directly to your bank. And I'm saying this, and obviously it's a little bit self-serving, But the reason why you want to make sure that you go to a broker and speak to a broker rather than going directly to your bank when you're doing joint borrower sole proprietor is because your bank may not even offer the product. And if they do, there may be limiting circumstances. So, for example, they may not allow a close friend, or they may not do what's called dual payments or dual terms. So you may have an older parent that's maybe in their 60s, which means that the length of the mortgage would be really short if you're doing it all based on the oldest person. And keeping in mind that when you do a mortgage, the criteria is always based on the worst person. So let's just say, you have amazing credit, your partner has amazing credit, but the parent, for whatever reason, doesn't have good credit, then the credit profile or the criteria will be based on the person with the worst credit. So by speaking to a mortgage broker, you'll be able to find the lender that has the product that suits your needs. It's a must. Always speak to a broker first. So those are the key things to remember when you're doing joint borrower sole proprietor mortgages.